Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, joining me in the studio is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it's quite tricky to call where the market is going at this point, and you can see sort of certainly the feed on Twitter. People, the bears in the morning, you know, they reckon it's going to go their way, and then they get flushed out when the all-share heads off to close to record levels again. The market seems to be all over the place, and I know that you want to start the show by looking at what is happening on the top 40 at the moment.
Yes, that's right. It certainly is tricky and frustrating at the moment, I must say. I'm also finding it difficult to call. One day the market feels like it's sort of topping out, and then the next day it just seems to squeeze all the shorts out, kind of like we're seeing today. If we have a look at the chart of the top 40 future now, and I'm going to show two charts. First of all, this one that we've got on the screen now is a weekly chart of the top 40 future. So what this means is that it makes one of those candlestick patterns every week. All right. Now, what's interesting to note is we've been trading in this large rising wedge type of structure for many months now. But what happened last week was quite notable, was that we had a weekly reversal, which is where you have the market running to a new high, but then eventually it sells off, and by the end of the week closes near the low for the week. And that's a reversal. You can call that a shooting star type of reversal that we saw there. And if you look back in the past, we've seen this on a number of other occasions. We saw it there in January. We actually traded that short position very well at the start of this year. And we saw another one similar to that in November of last year. So these types of reversal patterns have marked short-term market tops on our top 40 over the last several months. And as I say, we saw another one of those last week, but the thing is, it just doesn't really seem to be following through this week. The market's been very squeezy. When I mean squeezy, shorts are basically suffering in this market. If you're sitting naked short of the top 40 at the moment, you're struggling. It remains to be seen now still whether that weekly reversal that we saw last week remains valid, or whether it was a false signal and the market rallies to another new high again. So that's the weekly chart. And I want to now look at it again, but now looking at a daily chart. Okay. So this being a daily chart, it makes one candlestick plotting every day. And here we're looking at the last 6 months of trade or so. And there again, you can see a rising wedge pattern quite clearly defined. And last week, Thursday, we saw this large shooting star pattern. And again, it's the same concept. The market runs very high. By the end of the day, it's traded all the way back down, and it's basically closed in negative territory for the day. And very often, those things have marked market tops. And again, if you go back and you look previously, in early April, we saw one there before a brief little pullback. And back here in January, and again right at the end of last year, with these candles that have very long tails to the upside. It usually signals capitulation move to the upside, capitulation,
so in other words,
short
the short covering, they've just basically had to give up their positions wholly and get squeezed out.
Yeah, that's right. And that's the thing. Usually when you see those types of patterns, they have historically been fairly reliable reversal signals. So for that reason, I've been thinking, well, okay, it looks like finally now we've got a top in the market and things are going to start to come down. But again, if you have a look at the last few days' trade, there's been no follow-through, no proper follow-through. The market's been strong again, and we've been rising. And now it looks as if we want to have another go at this 45,000 level on the top 40 future. So let's see what happens. If you'd asked me last week, Thursday, Friday, I would have said, looks as if the top is in. But now I'm not so sure. Now it looks as if we might have another visit at new highs again.
I mean, is it a bit of a mug's game to try and call a top in a market like this?
It's very difficult to try and call a top in a rising market. And that's the thing. I mean, this is a bull market. We've got to face that. But we know that seasonally we're going into a weak time of the year. The market has been running hard for the last couple of months, so one would expect some sort of a correction. And if you're going to expect it, this time of the year is typically a good time to expect it. But yes, it's very, very difficult to try and pick a top in the market. And typically I will wait for a reversal signal, some sort of confirmation like what we saw last week. And to me, last week, Thursday, I was fairly convinced that we had seen a market top. But I don't know now. Along the lines of this theme, though, though, I just
the
want to
seasonality
I
thing,
want to
yeah.
point out the seasonality, and I know we've shown this chart on the show before, but it's very interesting to note the time of the year that we're going into. You can see historically now this chart represents the average performance per month for each of the months of the year on the top 40, and we're looking at the last 17 years here since 1996. And if you have a look there, you can see these first couple of months of the year are generally quite strong months. But look at June. It's a very, very weak month. Historically, on average, June is a month of the year that loses more than 1% on the top 40. It's the only negative month on, pure on a historical basis. But then if you go beyond that and look at July, August, and September, you can see all of these months, basically these middle months of the year are very sloppy, choppy type of months. Not a lot of gains to the upside, not a lot of action. So I think we're going into this time of the year where one still does need to be very, very careful. And talking to this point, we put an option structure on the top 40 last week for viewers that were watching, and those that didn't watch it, they can pick it up on either the website, Business Day's website, or on traderscorner.co.za. But you can go and have a look at the option structure that we put in, and that runs out to September. And really, that gives us participation to the downside if the market should fall. But if it continues to rally, then our risk is very capped and we don't have a lot of risk on at all. And that's the way I'm quite comfortable to play the short side of this market at the moment, because like you said, it is a bit of a mug's game trying to pick the top. It might happen this week, it might happen in a month's time, who knows. But I'm fairly convinced that at some stage during the next 3 or 4 months, we're likely to see a pullback of, say, 5 to 10% in this market. And that option structure that we did last week positions us perfectly for that. It allows me to be short without having the naked exposure if the market continues to run higher from here.
Well, that's the thing, because if you have a naked short exposure, then you get squeezed out. So that's the risk that you run.
Exactly.
Yeah.
That's right. And that's why doing a short via an option structure like what we did last week is great, because it gives us that downside participation. But yet I can still sleep at night knowing I'm not going to be squeezed out if the market should rally beyond all expectations.
Guys, just a point. If there's sort of a collective sense of waiting for the correction to take place, and one definitely gets the feeling that people really want to see a bit of a pullback, does one infer then that there are lots of the shorts are building up in the market, and so just going back to your point about what we've seen now is all those short sellers getting flushed out? I mean,
yeah, I think that's 100% right. If you talk to a trader and he tells you, "Oh, I think the market's going lower," likelihood is he's already short. So, and I think there are lots of people out there with that sort of view. So I think the market is fairly heavily stacked in the sense that there are quite a lot of short positions. And if the market doesn't begin to come down, the likelihood is increasingly greater that those short positions will be squeezed out.
Okay. Okay, so that's sort of the backdrop to the trade that we're going to be looking at this week, and that is a trade on the platinum price. So firstly, but it's the in rand terms, but I know you want to have a look at it in dollars first.
Yes, that's right. Look, as far as going long on stocks in our market at the moment is concerned, I'm wary. Given the lofty levels that we're at. So I'm looking at something different this week, and something that's not really linked to any of the stocks, not linked to the stock market at all really, but it's the platinum price. And we know the situation in Rustenburg with the strike that's now into its 4th month. Stockpiles are starting to run low at the mines. The production is significantly hampered by the strike at the moment. And if we have a look at the price of platinum, it hasn't really done an awful lot yet on the back of the strike. There we go. This is the dollar price of platinum at the moment. And if you have a look there, there's a significant area of overhead resistance at $1,485 an ounce. And you can see that this price has bumped up against that level numerous times over the last couple of months. We're once again testing that resistance. But now my sense is that this probably will break out to the upside at some point soon. If you think about the fundamentals and the shortage in terms of production at the moment, to me, it just seems logical to expect that at some point we're going to break through this resistance level. And once that happens, if it happens, it could be a fairly violent breakout. The
caveat, though, is that there are considerable stocks of platinum above ground, which is and not exactly exuberant demand from the car markets in Europe. So that is the one thing that is acknowledged to be holding the market back.
Yeah, I think that's right. We're aware of that. Obviously, there is a lot of platinum above the ground. But I still think that ultimately, the longer this strike drags out, at some point there's going to be a problem in terms of supply. And I think this chart is, to me, if I just eyeball that chart and look at it, it looks to me like it's just asking to break out to the upside in a matter of time. So that's the dollar price of platinum, and we'll keep an eye on that. I want to now look at the rand price of platinum, which is what we're going to effectively be trading this week. Now, there's the chart of the rand price of platinum. Similar sort of look, similar setup in a way to the dollar price. Not exactly the same, but similar. We've got this flat top overhead resistance at 16,100 Rand per ounce of platinum. And if we look recently, there's been this falling wedge structure which is now broken out to the top side. And that typically is a bullish setup when you get a falling wedge like that that breaks to the top. That should now result in a rally back up to 16,100 Rand at least. And then we'll see from there. If we get a break above 16,100, then that could actually open quite a significant move to the upside if we get a technical breakthrough there.
But is that the initial target that you're looking at, 16,100?
It's the initial target, but I'm also potentially being, positioning myself for a possible breakout through that major resistance.
Okay, so to trade this, what instrument are you using, Garth?
Right, we've got the NewPlat ETF. This is a product that was listed in the middle of last year. It's the same people that brought you the New Gold ETF, ABSA, the issuers. This is one on the platinum price. So what this thing is it is a rand price. Basically, it's a share listed on the JSE. It's an ETF, an exchange traded fund, and every share represents 1/100th of an ounce of platinum priced in rands. So if you have a look here, you'll notice that the technical setup is almost identical to that chart that I just showed you now. This is the price of the platinum ETF itself. So we've got this resistance at 161 Rand per share. We've got this falling wedge structure that is now breaking out to the upside. Now I've gone long at 152 Rand 60. I'm using a stop loss at 147 Rand. That stop loss would basically imply a violation of these recent lows from April. And I'm looking at an initial target of 161 Rand. But like I said, if we start to see a breakthrough 161, then it could start to get quite interesting in terms of a move higher.
Okay, so that's in greater detail. What are the mechanics of that trade then?
All right, so I've bought it at 152 Rand 60. My stop loss at 147 Rand. The risk per share is 5 Rand 60. I'm going to risk 1.5% of our capital. So we've got 300,000 Rand that we've got available at the moment. 1.5% of that is 4,500 Rand. If I divide that portfolio risk and divide it by the risk per share, it means I can trade 803 shares. So rounding that off, I've decided to do 800 CFDs for our portfolio. My initial target is 161 Rand. And that means that my risk to reward ratio on this is 1 to 1.5 based on that initial target.
And Garth, would you, just going to the 1.5% of the account that you've risked, it is, the maximum is 2% for our account. Any particular reason why you've taken a little bit less than that?
No, not really. I think the only reason I can say is that we've had a bit of a bumpy time of it lately, and I've just scaled back the risk slightly. We've had 1 or 2 losing trades on the trot, which happens in trading. Yeah. And I guess I'm just looking to try and get back on a winning streak, but I'm going a bit cautiously.
Okay. Proper trading principles we are espousing here.
Absolutely.
Garth, so what does the portfolio look like? You did hit at it, not much change from last week.
Yeah, it's pretty much the same as last week. You can see the positions that we've got open. We've got 2 option structures. So we've got our June contract, which runs out to the 19th of June. Then we've got the September options structure, which I spoke about on last week's show. That runs out until the 3rd week of September. And then this week's new trade that we've done is on the NewPlat ETF, where we long of 800 CFDs from 152 Rand 60. So we're still sitting up almost 20% for the year to date, 300,000 Rand, still looking okay.
Yeah, and just to end off with, Garth, a reminder on your next course dates.
Yes, I've got a number of courses coming up all around the country. You can see the dates there. I'm running these on a Thursday evening, a CFD course, and then on a Friday, full day high probability trading course. Joburg, Cape Town, Durban, and Port Elizabeth. For the first time, I'm going to be going to Port Elizabeth. So you can see the dates there. If you'd like to attend any of these courses, you're welcome to email me, garth@traderscorner.co.za for details, and then I'll send you the details.
Great. Garth, we have to leave it there. Thanks as always for coming onto the show. That's Garth McKenzie, the founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.